Spider ETF wrap-up, and this wrap-up is for the evening of Thursday, the 18th of August, 2022. I understand tomorrow, Friday, is going to be a big option expiration day. Be on your tiptoes here. A lot of trades going to happen as there's billions in these options expiring, going to be put back on in other areas. A lot going to go on tomorrow. And that'll be the primary part. There's no U.S. economic data due out. Next week, all kinds of stuff happens. Today's the 18th. Next Thursday begins the 3-day symposium at Jackson Hole. That's what we'll be watching. We want to see what the Fed's going to say, what other central bankers are saying. How aggressive are these people going to be? What are they thinking about inflation? How sticky is the issue? Everything else they say I don't care about. That's what we want to know. And that's the argument going on in America. The argument amongst analysts is, oh, the Fed, they got it wrong. They're going to have to, in 2023, pivot sooner than everybody thinks because on its own, inflation is going to fall. With the added interest rate hikes that we get done this year, it'll accelerate it, and they'll be pivoting sooner rather than later. I'm not being facetious. That's what they think, and they may be very right. The other people are saying, nope, sorry to tell you this, that inflation's going to hang around. It'll get sticky in different areas. You can take it down a bit, but you're not going to take it down dramatically. With that, what do you do to get back to their target of 2%? You're going to have to go through all of next year with interest rate hikes, not 3/4 points at a time, 1/4 points at a time after you maybe get done with the bigger chunks of it this year. Those are your two arguments at this point in time. Which one's going to be right? I haven't the slightest idea. And that's not my job. My job is to read the charts. Because the charts at any point in time, in theory, is the summation of what everybody thinks. Don't you agree with that? I mean, that's how price is determined. Okay. I want to remind you that at any point, I have a bunch of free offers. And if you'd like to see them, just take your cursor, move it up here. At any point, you'll see an icon come. Click on it, take you right to the free offer section. Take advantage of them. I think you'll like what you see. So Freeport, I elected to keep it, and what a good call that was. I was going to get rid of the chart, and I said, you know, I like what I'm seeing in copper overall. So as we widen the chart out, we've had a pullback, but you have maintained the pattern of higher lows and higher highs. In the futures today, it was a wild day. You went from the mid-350s up to the mid-360s. That's a big move. 10 cents is a big move in the market. Now, was it because volume's thinner at this time of the year? Could be. It could be that somebody somewhere, when you got into the 350s, the mid-350s, said, oh no, you got to own copper here. Maybe China's doing something. I frankly don't have the slightest idea. Whatever China does, it's going to be a bullish surprise to copper. Why? They have to do stimulus of some type. President Xi has one-handed ruined big parts of the economy. He's the man to blame. Everybody else is scared to death of him. That's how you look at it. So when I look at it, higher lows, higher highs, and where's the market fighting its battle? You do remember I tell you over and over about the 18-day moving average of closes. And on that moving average, when you get down to it, that is the line in the sand. That's where traders from that number try to figure out what to do. For the time being, the bulls have won. Each challenge of it hasn't been able to get through it, and you've maintained the overall pattern of higher lows. Now, the reality of the pattern is also, if we take a look, today's high at 31.40 does not take out 31.47. So you have a lower high, a higher low, you've narrowed in like that. If it can take out 31.47, in theory, the bulls win the day and the market moves. Maybe it gets up to 32.43, the upper Bollinger Band. Momentum in the market had corrected, past tense, an overbought condition. Now you've got all the numbers under 70, both the K and the D line, the red and the blue. So they're neutral. They're sitting here, okay, what do you want to do next? You get bearish in the chart. You heard me just give you the flip-flop. If the market gets under 30.01, If it gets under that and closes under 30.24, the bears take control and they open up an avenue for 28.06. Barring that, the 32.43 area. AMC. I'm not a lover of this stock, as you know. I think their debt is so big. I think they're going to lose their audiences in 2 more weeks. Then they go into that nonsense period up until Christmas, maybe a little bit of Thanksgiving travel, but not big. The big movies have come, or they're coming now all out and they're done. I'm not a friend, not at all. And I realize the mean people, this is their darling. GameStop this, and I get it. But the chart action is bearish with today's action. You'd have to get back over this high. You're opening the door to come back into this whole realm right in here. So you had a nice run, you never embedded, and now you've broken the back of the bull. It's over. Apple, still in the bull. If the red line closes under 79, it'll be a warning to you that the market wants to give you a correction back to that 18-day average. You're now just over what, 3 weeks, roughly, September 7th, of the release of the new Apple phone. Pricing, we're starting to hear more and more about it. Okay, but how much of that's built into this whole rally? I'm skeptical now. I'm questioning, you buy the rumor, you sell the fact, okay? That's what I'm starting to think. Disney, again, I want to repeat this and make this very clear to you. We'll come back here. 1, 2, 3, 4 days. Sometimes you get 5 days in a row over a Bollinger Band. After that, you're on borrowed time. You're generally going to pull back in the marketplace, and that's what you're doing here. As long as the numbers stay embedded, which means both the red and the blue staying over the 80 level, I think the pros are buying on the breaks. The moment you get a reading of the red that's under 79, game over. I think you'll go back to wherever the 18-day average of closes is. Does it always have to happen? No. But the lion's share, big time, it does. Do your own work on it. Take my course, you'll see it right away and you'll know how to look for it. You're still embedded here, so I'm still bullish. But again, in XLF, let's you and I back up on this, okay? I mean, it's pretty easy to learn these things. So here's the market, and you're going, oh, I got to get in. This thing's running. I got 4 days in a row. It's going to that 200-day average. And then Ira's saying, the odds of it staying beyond 5 days in a row up are slim, real slim. You're going to get a better opportunity. There's the 5th, and you're going, that damn Ira, he doesn't know what he's talking about. He's costing me money, and now you get your break. That's how it works. XLI, embedded. You have a lot of embedded readings in the stock market. A lot of them. So many, I wonder if they're all going to let loose at one time the other way. And they've come up dramatically from that June-July period, so big. Now, you're over the 200-day average. You generally don't spend a lot of time on the first challenge of it over it. So I'm looking for reasons for this market to give something up. I could be very wrong. I have no sell signals, but I also don't want to be a buyer over that 200-day average. XSD, no. You lost your embedded reading. It's too difficult to do anything. Did it embed? So let's you and I take a look together. Both numbers here are over 80. Both numbers here, over 80. Both numbers there, over 80, not the day before. So you had your 3 days. Then you lose it, as you'll see. Now, if you take this out, it's one of those situations where I don't know what it's going to do, but something else happened. You're already at the 18-day average on the 3rd day when you dropped it. I don't care what it does at this point. You've hit your target. Does that make sense to you? And so there's really nothing that I'd want to do in the market. You've hit it. The goal was the 18-day average. You hit it yesterday. Home builders, you just closed under 79. The only time you can re-embed is tomorrow, that first hour of trading typically. If it doesn't do it, then it's not going to. And the goal becomes the 18-day average of closes. So to me, it's saying liquidate longs. We'll see if I'm right or wrong. XLE, you're up to the upper Bollinger Band. What do you think I tell my traders? if you're a subscriber of mine, I'll be screaming, no, you got to get out of all longs, all of them. Dump your position. GLD, what happened when you lost the embedded reading? This market just let go to the downside. It didn't even wait. It just immediately fell apart. GDX, I've told my traders not to be buying this period. I think that the miners were the weakest part here, and SIL all the way through. The strength is still copper, but it doesn't look good on this chart. It looks better on the futures than it does here. This type of chart is just overbought, not saying to do a darn thing with it. And, that's how I think you got to approach it, just the way that we're saying. AGG, in a bear trend, downside target, lower Bollinger Band. For all purposes, you got there yesterday. You're oversold. I think the smart money's coming out of the market. Will they resell? No. You're too oversold. So I'm not looking for them to be reselling it in that area. I think there's better areas to do things. Now, UUP. You've gone from the lower Bollinger Band in 1 week back to the upper one. I'm saying you're going to stay within that. You're not going to break out one way or the other. You're going to stay within that for a bit. And the flip-flop is true of the euro. You went from the upper Bollinger Band to the lower with today's action. So I put it together. I go, I don't have to play. I want you to take a look. Remember that if you move your cursor up, you'll be able to see our free offerings. Just click that, sign up, and I'll see you tomorrow.